Jason, you say in, let's see, 49 minutes and 22 seconds, Trump will go big. Why?
Go big or go home. It's very simple. In typical Trump fashion, you start very big, ask for the world, and settle for a small country. I think there will be countries that imminently come to the table and compromise, and others that dig in. The good news is the temperature is likely to head north in terms of it improving. And so I do think that there will be some clarity, and I also think that we won't be as obsessed with every headline coming out of the White House specific to tariffs.
Okay, I would say he will go big because you don't hold a big event in the Rose Garden, his first of this administration since he's been elected, if you're just going to announce some incremental tiny moves, right, Dryden?
Exactly. I mean, the president has found his weapon of choice, and that's tariffs. So he's using it both for foreign policy, for economic terms. This is his weapon system. He's able to unilaterally impose it. He doesn't have to get a lot of permission with it. And this is the sword he's going to wield.
But when you look at year-to-date picture for the Dow, S&P, NASDAQ, Russell, even just with the threats, it looks like that weapon has either jammed or is backfiring a bit. I mean, all of the majors are down year to date since he started really talking about the fact that this was going to be a prime focus for him.
Sure. But one of the things is, we get about a 10% correction about every 13 or 14 months. So we're getting this normal correction that probably had been 17 months since we'd had one. And so the headlines create a lot of turbulence here. It's an excuse to kind of do the things that people were worried about. And I'm more interested in bottom lines than headlines. And if you look at the economy.
Good line.
Thank you.
I like that.
You can keep it. You can use it. But I think that the economy really seems to be humming along fairly well, but no one can hear the humming because there's all this hyperbole around this thing or the other. And the tariffs piece of this is only one part of a policy. The tariffs are a tax, so that's taking money out of the consumer's hands, but we've got tax cuts coming that puts money back into the consumer hands.
Which is kind of what John Kennedy said. He said the way to spur growth is to reduce spending, government spending, deregulate the economy, and make the tax code more friendly to consumers, et cetera, to Americans. But what do you buy here, if anything, or do you just sit tight to wait to see what happens after the bell?
So this is like having your vegetables before dessert, and the vegetables are not that palatable. But to Dryden's point, we have tax reform, we have deregulation, and I do think you'll get a softer touch. And I have to address another point that you made, and that's that if you look beneath the surface, it isn't that bad. Bonds are up on the year. The other 493 companies are flat on the year. The value index is up on the year. Europe is up on the year. So if you're diversified, you're weathering this storm. To answer your question, where do you invest? If you have an horizon more than a week or a month or a year, look at the longevity plays. Think about how the people 60 and over in this country by 2050 will double, 2 billion people. They're going to need financial services. They're going to need healthcare. Financial services, they're going to control, we're talking about $190 trillion of wealth. People 60 and over control 64% of that. So the answer is financial services and healthcare, even if healthcare is in the crosshairs in the short term with tariffs.
Okay, I would love to sit here you guys are welcome to hang out because we got the big event in 46 minutes, less than 46 minutes. But Jason and Dryden, it's great to have you both.